Hi class, and welcome back to Lesson 2, the reality of temporary tax brackets. Now the premise of Lesson 2 is the reality that starting in 2018, Congress passed sweeping tax reform that directly affected your retirement taxes. So I want to share with you a few aspects that you'll immediately feel the change of these taxes. Now the three things that we're going to cover in this lesson is the standard deduction, nearly doubling. The deduction for state and local taxes has been capped. And then the third is tax rates were lowered almost across the board under this new law. As we talk about this first point of the standard deduction nearly doubling, let's take a few minutes to look at the difference between an itemized deduction and a standard deduction. Now, a standard deduction is a set amount that is deducted from your taxable income, as you can see over here on the right-hand side. A itemized deduction, over here on the left, is a dollar value of each deductible category. Now, to give us an example, let's go back to the tax story that we just learned about in Lesson 1 of Bill and Janet. Now, Bill and Janet in their working years, and possibly similar to you, had a lot more itemized deductions. They had $10,000 of mortgage interest per year that they were able to itemize. In addition to that, they had $15,000 of tithing donations that they also were able to itemize and deduct. And on top of that, they had $10,000 of state and local taxes. This is your state income tax and your local property tax. Altogether, Bill and Janet in their working years had $35,000 that they itemized in their tax returns. Now, going back over to the right-hand side, the standard deduction for Bill and Janet, once they reach their Social Security start years at the age of 65, and then also into their RMD years at the age of 70 and a half, both of those years, they were able to take just the standard deduction of that $26,600. The reason being is at that point, their mortgages had already been paid off, so their state taxes were a little bit lower. They still, however, donated tithing to their church, but it was based off of their pension and Social Security numbers, not their salary numbers. So that was also less. So the accumulation of their tithing donations and their state and local taxes was less than the $26,600, hence them taking the standard deduction as opposed to itemizing the deductions. It's important to note that the new law almost doubled the standard deduction from the previous year. In 2017, for single filers, it was $6,350 and it jumped to $12,000. And for married filing jointly, it was $12,700 and it jumped to $24,000. The second point that we want to talk about in lesson number 2 is the deduction for state and local taxes, often called SALT taxes. This new cap on another widely used deduction, the state and local taxes, including property taxes or SALT taxes, will likely impact your taxes in retirement. In the past, the total could be deducted, period. Your SALT taxes made no difference to its deductible status, but for 2018 and beyond, your SALT taxes are restricted to a total of only $10,000. Hence, it's been capped. If your SALT taxes is less than $10,000, there's essentially no change stemming from the SALT cap, although you should consider the advisability of choosing itemized versus standard deductions. Now, for the third and final point within this lesson, which is tax rates are lowered almost across the board under the new tax law, let's take a look at this graph to compare the difference of tax rates between 2017 and 2018. You can notice almost at each tier, other than the first tier of the 10%, which is capped at $19,050, almost all of the other brackets are lowered. For an example, a couple that made $70,000 would have been in a 15% bracket in 2017, but in a 12% bracket in 2018. Another example would be for a couple that made $140,000 in 2017 would be in a 25% bracket, but in a 22% bracket in 2018. All three of these tax changes that we just talked about are set to expire or sunset on December 31st of 2025. So essentially all of these lower tax brackets are on sale until that point. So in lesson 3, let's talk about how many deductions might be disappearing. We'll see you soon.